Introduction to Accounting Ethics. Ethics refers to the moral principles that guide human behavior. In accounting, ethics ensures that financial professionals act with integrity, objectivity, professional competence, and due care, confidentiality, professional behavior. Ethical principles from major bodies. AICPA, U.S. Code of Professional Conduct. ISBA, Global Code of Ethics for Professional Accountants. ICANN/NBA, Nigeria/Tanzania emphasizes truth, fairness, and public interest. Ethical Accountants act not only to obey rules but also to promote transparency, trust, and justice in financial reporting. Internal controls and GAAP. Internal controls are processes implemented by management to ensure reliable financial reporting, compliance with GAAP, effective and efficient operations, protection of assets. COSO framework. 5 components. Control environment, tone at the top, ethics, culture, risk assessment, identify and manage financial risks, control activities, authorizations, approvals, reconciliations, information and communication, transparent flow of financial info, monitoring, regular evaluation of controls. Key GAAP link. Internal controls ensure GAAP compliant reporting, prevent material misstatements, and form the basis for auditor evaluations under Sarbanes-Oxley Act, SOX. Professional judgment in GAAP application. While GAAP contains detailed standards, it also requires significant professional judgment, especially in areas such as revenue recognition, timing, fair value measurements, asset impairments, contingent liabilities, leases, and debt classification. Accountants must blend technical knowledge with experience and ethical discernment to arrive at fair and faithful representations of economic reality. Ethical challenges and dilemmas in practice. Common dilemmas accountants face. Scenario: ethical risk, pressure to inflate revenue, misleading users and earnings, manipulation, omitting contingent liabilities, hiding future obligations, aggressive depreciation, changes, distortion of asset value and earnings, understating expenses to boost profits, fraudulent reporting, granting unmerited bonuses based on false earnings, breach of fiduciary duty. Notable scandals: Enron, 2001, off-balance sheet liabilities, auditor collusion, Arthur Andersen, WorldCom. 2002, inflated earnings through capitalization of expenses, Wirecard. 2020, fabricated cash balances, failed oversight by auditors and regulators. Ethics in financial reporting, practical application. GAAP plus ethics equals true and fair view. Ethical compliance enhances stakeholder confidence. Accountants serve public interest, not just the employer. Encourages long-term sustainability over short-term gains. Ethical accountants may lose a job but save their career and reputation. Ethical decision-making frameworks. Steps for ethical decision-making: identify the issue, what's the ethical dilemma? Consider the facts, what data, laws, or standards apply? Evaluate alternatives, what are the options and consequences? Make a choice, apply professional judgment, reflect, document rationale and be prepared to defend it. Role of whistleblowing and regulatory enforcement. Whistleblowers protect integrity of GAAP reporting. U.S. Dodd-Frank Act and SOX 806 protect whistleblowers in Nigeria. EFCC and FRCN play enforcement roles. Regulatory enforcement through SEC, GAAP, ICANN tribunals. Building a culture of ethics in accounting firms. Training on ethical standards and GAAP, enforcing zero tolerance for fraud, promoting transparent communication, implementing ethics hotlines, encouraging ethical leadership at top levels. Ethical culture prevents fraud more effectively than rules alone.